Morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments for Monday, June 24th. A bit of a defensive night in the overnight session, down in the neighborhood of around 4 or 5 cents in the wheat market, down around 5 to 10 cents in the corn, down around 8 to 14 cents in the soybeans. Kind of the same pattern in the meal. But the pattern I want to get at to once again is where we're finding out we're catching still once again a bid as far as the old crop, new crop spreads go, and we have the nearbys not down as much as the deferreds. The deferreds, that being your D's corn and your November beans, on the defensive, mostly on the lack of any type of immediate weather threats. We're going to get crop progress out this afternoon. The trade's looking for a little bit of an improvement in the corn crop and bean crop versus a week ago. We're also going to find out that we're getting the bean crop planted. We're harvesting a winter wheat crop. Hybrid spring wheat crop is also seeing a little bit of improvement with the warming temperatures that we've had and the rain moistures patterns that have been moving across the corn belt. So once again, no immediate weather threat there. Then we're also going to be working our way towards an important USDA report at the end of the week, that being June 28th, of which we're going to be getting out our quarterly stocks numbers and are also going to be getting out our acreage numbers versus the March intentions. Even with the corn acreage expected to be down in the neighborhood of around 1.5 million acres versus the March intentions, we're still looking at the potential as far as if we do have these good yields and crop conditions currently, that we can still be working with a 1.5 to 2 billion bushel type of corn carryout for the coming year, particularly when we have this competition from other foreign suppliers lessening our demand, and thus the reason why we've been kind of in this neighborhood of not trying to go and have a sustained rally above the 550, 575 area. And then if we are going to get the increase in bean acres, and if we do have a good yield, and once again with South America being in competition and us looking at a 200 to maybe in the neighborhood of around a 300 million bushel bean carryout next year, depending on that yield, once again, is it really justified to have the bean crop in the November contract being $13 and higher and having a sustained rally from there. So we punched into new lows as a result of that, but we're also going to be working our way to first notice day with the deliveries. We continue to contract them, and we continue to be above delivery value, so we're not looking at much deliveries at the end of the month, and thus the support in the nearby spreads. So anyway, other reports, we'll have exports out later this morning. We'll have Canadian planning intentions tomorrow, and those will be some of the more immediate reports coming on up into ours at the end of the week for June 28th, that being acreage and quarterly stocks. So once again, a defensive tone, but still looking at the spreads being supportive unless we get some heavy farmer sell rate. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.